All right, guys. Just would like everyone to use their headphones to avoid echo. Perfect. Uh, uh, so hey guys, I'll everyone joins. Let us give an introduction. Though you don't need an introduction to Amrit. He's the co-founder of the amazing platform that we are all working on, Zilliqa, who has taken out time today to interact with your experience and tell you guys about DeFi and NFTs. That is something that we'll be starting now with this module. So I like to invite Amrit here to just share and give a background about himself while our other participants are joining in from their meetings and starting with before we start with the talk and everything. Amrit.
Oh, sorry. Hi. Hi, my name is Amrit. Thank you very much, Manav, and everyone for joining this session. As Manav said, I'm one of the founders, and there were actually 7 founders. I'm one of the founders of Zilliqa, which is a blockchain platform. We started back in 2017 at NUS, which is the National University of Singapore. I was born in India, so I grew up in India. I studied in India, especially mathematics in India. Then I moved over to Paris, where I did my engineering, and then I stayed in France to do a PhD. So I come from a research background. I won't call myself a developer or engineer, but obviously, when you do PhD and when you do engineering, you have that background. So I come from that background, but mostly from a research angle. I have a few slides prepared that I'm going to go through, but the idea of today's presentation is not, of course, I'm going to give you a little bit of context on what DeFi is for those who are new to the space and domain. But my focus area would be essentially on pointing out some of the challenges that the DeFi space is facing today, and some of the key areas of products and services that I feel we could develop on top of Zilliqa. And the reason why, so I would try to focus it at some point around Zilliqa is because I feel that there is a huge consumer base around Zilliqa. So I'm not going to talk about the technical benefits or what people get when they build on Zilliqa, but more about that there is a consumer. So we have consumers around Zilliqa platform, and I would like you to take opportunity to tap into that consumer base. So build products that they would like to use. Yeah, so that's kind of my introduction. Thanks, Manav.
Thank you, Amrit, for this amazing introduction. Uh, Anyone wants to, share their experience right now, talking, working on Zilliqa till now, anything? Akshay, you would like to come on stage and speak something? Share the experience till now, what you have felt with Zilliqa and with the participants here?
Am I audible?
Yeah. Yeah.
Yes, you are.
Yeah. So I think I'm having a wonderful time, sort of listening to everyone. Go have them go at each and every assignment. I think it's just an amazing opportunity to have such an evolved, I would say, team with us this time. So yeah, just glad. One, for Amrit for supporting us, for allowing all of us to build on Zilliqa and be a part of such a vibrant ecosystem. To everybody within our blockchain India community for taking this plunge with us and considering this worthy for their time, their effort, and yeah, excited for what emerges. And thanks, Amrit, for taking out time. I'm really looking forward to learning from you today.
Thank you very much.
Thank you, Akshay. Amrit, over to you to
Sure.
start with your thought.
Sure. So let me share my screen, and then I need to give permission to the app. It looks like I'm struggling with the.
Can you see this share screen button?
Yeah, I click the share screen, then I try to open system preference and nothing seems to happen. Oh, I see it now.
Did that work, Amrit?
Yeah, I have to add manually the app for screen recording, I think. Let's see if now
Yes.
it works. It's strange, but because I can see the screen recording is enabled for room key. Let's see if it's camera. Let's see.
Can you check the source? See the source when you're sharing your screen?
Source. Try this. No. I have my screen recording enabled for. Sorry, guys. It's
I'm sorry, Amrit. I'm also checking what can we do there. Have you seen apply to all screens when you do the set screen source?
I have just one screen right now, so let me see if. I think the issue is about recording the screen. It's not about. There that it says.
You need to share the screen.
Yeah, I click share screen, then it says open system preferences to allow to record the screen. I do that, it doesn't do anything.
Then you need to minimize your just minimize your room key app then, and then see or change the screen then. If you are using a Mac, then you can open two screens and just add room key on the other app.
Or should I try to log in again, see if that helps?
Yeah, let's try that.
Okay,
also, Amrit, could you just share the presentation with Manav so that if yours does not work, probably Manav can share his screen.
Okay, let's do that. I sent you the link, and I will try to restart the app just in case. So I'll exit and come back again.
Don, why don't you quickly introduce your story about how Rookey started?
Cool. I'm sorry, everybody, that there's some technical issues there. My name's John. I'm the person who came up with this crazy idea a few years ago, back when I was living in San Francisco. I just actually flew back from the United States to London, so I just landed about an hour and a half ago. I'm a little jet lagged. So the idea originally started because I was hosting meetup events, and I'll just quickly jump off it.
Yes, Amrit.
Okay, sorry. I think it's
Thanks, everyone.
better than before. Now I can see a screen option, which so it basically says I have to pick my source. But when I click there,
Yes, you need
maybe
to
you
pick your
could
source.
you could present the slides, Manav, if it's easier.
Even I am actually from my phone and I'm not getting the option. Akshay, can you do it if you're from your laptop? Okay, perfect. Akshay is doing it, Amrit.
Okay, perfect.
I'm just downloading the file. Oh, it says unsupported device to me. Screen sharing is only supported on Mac OS 10 and above, 10.15 and above. Okay, so Don, can you help us with this? Can I share the link with you?
Can you share it with Aaron?
Sure, sure. I'll just put this link on probably the chat here, right?
I don't think you can copy and paste from there, so you have to email it to Aaron or to Paris.
Okay, can you have his email here?
Yep.
I have shared it on a mail trail down.
All right, you're connected in email, Akshay.
Yeah, it's sent. Iran, can you please check it for us once? You must have received it by the on your mail. Okay, until then, how about guys? I'll send everybody the link on a WhatsApp group, and probably we can all open the screen on our ends, and keep switching between this conference hall and that document. How about let's just hustle along and sort of have that on each of our own screens separately, probably on a different tab.
That'll be great, guys, if you all can do that.
Yeah, so I'm just sharing it on the WhatsApp group.
Do it, Akshay, do it.
Yes. Yeah, please go ahead.
Perfect. So, Amrit, you can start with the talk. Sorry for the
Sure.
confusion.
No worries, no worries. I mean, I guess I should have checked it before this. There's still some echo.
Akshay, can you mute yourself?
Yes, I think it's me.
Okay.
Over to you. Amrit.
Thanks. Now it's working. So sorry for the trouble, and welcome to this presentation. Again, as I said, this talk is mostly going to be about decentralized finance, not so much about NFT, but I think there's a slide somewhere down the slides where we're going to talk about a little bit about what's I feel the Zilliqa space, the Zilliqa blockchain consumers would love to see in terms of NFTs. But most part of the talk would still be going to be around decentralized finance. So for those who are new to DeFi, I often use this slide almost everywhere. So by the way, you'll see, for those who were around last time, I did a presentation on DeFi. So I'm going to borrow some slides from that presentation as well. So you might see a few of slides repeating here. But there are some new slides as well. So you'll see which is specific to sort of this sort of course, let's call it, and program. But let me start with a little bit of background for those who are new to DeFi. So the basic vision behind DeFi was to be able to create a sort of parallel and alternative sort of financial system that could allow people to use every single decentralized financial application every single financial application that you see today in the traditional world, but built on the blockchain. So the idea is, for example, to be able to have payments, currencies, lending, insurance, and all those services that you can imagine and use today in the traditional financial world. You would like to do so the same thing on a DeFi, on a decentralized financial platform. And all that you need to be able to use those services are basically one mobile phone and internet connection. So as long as you have an internet connection that works on a mobile phone, you should be able to access those services. And that's what that makes the whole decentralized world much more powerful. So if you think about some of the key features that the DeFi world sort of aspires to provide to its consumers, one is borderless. It means that whether you be in India or in Nigeria or whether be in some remote parts of Africa, you should be able to access those services without worrying too much about KYC and so on. The second thing is about unstoppable. So the fact that these services are actually built on top of a blockchain, it's very hard for even the service provider to sort of kill that service down. And on top of that, at least any third party, including government, should have a very hard time stopping and preventing those services from running on infrastructure. So they cannot sort of prevent people from using these services, and that's powerful, because then it gives people a permissionless sort of framework and permissionless sort of dApps that they can actually use in day-to-day life. The last part, the second two parts are around transparency. So people who are familiar with sort of how traditional financial world works, there's a lot of things that stays behind the scenes. It's very hard for you to know how some of the parameters of the system are decided. The good thing about DeFi is that everything happens on the blockchain, so you actually can see all the parameters and how they are set and how they change over time. And whenever those parameters get changed, you would know either through governance that you would know that the community voted for those changes to happen, or that the core platform team decided to make certain changes because of certain things that they felt would be beneficial for the broader community. But so all this decision making that happens and changes that happen to the protocol, to the system, actually are transparent to everyone. And the last part, which I think is one of the reasons why the entire DeFi space has really mushroomed, is around composability. So when someone builds, let's say a payment system, you can actually build on top of it in a Lego way. Let's say a decentralized marketplace where people can trade those assets and tokens. So the idea is that you build the small pieces, and anyone who has access, because it's permissionless, you can actually look at those products and you actually can build products on top of the existing products. And therefore you can take smaller pieces and you can compose them to make bigger chunks of. So to give you a few examples of what you can imagine of building in the product in the DeFi landscape is obviously stablecoins. So because this is the basic piece that you need. So in order to build any financial system, you need a method of payments to be able to sort of settle things and settle trades. So you need a stablecoin, and it could be a fiat-backed stablecoin. But in the ideal world, you'd like to build a stablecoin that does not rely on fiat systems because they are centralized services. So there are all sorts of stablecoins that are out there now. One of them very popular being MakerDAO. And then you have more algorithmic stablecoins coming up, which is now the craze in the DeFi world, especially on the Ethereum world. You can obviously build all sorts of assets, including utility tokens that you could have on top of a DeFi platform. But you would like to build a marketplace, a decentralized marketplace, which allows people to trade those assets. You could imagine building a lending borrowing platform like Aave or Compound, where people who have excess assets would like to loan them to other parties who don't have enough, and they would be able to sort of earn interest rate from that. And basically a platform, the money market fund basically decides how that interest rate, in an algorithmic way, decides how those interest rate will be decided. You could imagine all sorts of insurance products. And this is quite interesting in the DeFi world, because if you look at the traditional insurance world, sort of the threats and issues or risks that you would like to insure. In the DeFi world, a new emerging risk is actually popping up. And that risk is around technology. So you don't know whether the contract where you're putting your money in is going to be safe or not. So it's very possible that contract may have bugs, and someone may be able to attack or hack that contract, may be able to steal funds from that contract. So you want to be able to insure against that technological risk. And that risk is actually growing at a rapid rate. Because with this composability that I talked about earlier, a lot of products are being built that are becoming more and more complex. And so because of that, risk is also compounding. So sometimes it becomes very difficult, because you may be using another product and that product may have its own risks, and that may compound because you are actually using that service within your own product. So this risk is actually propagating at a rapid rate, and we need to understand and build products that can ensure consumers who are using the products. You could imagine all sorts of DeFi derivative products. For example, there are people in the DeFi world who obviously hate, let's say, all sorts of centralized services. But there are some people, obviously, and there are some consumers in that space who would like to have access to centralized, let's say, products or centralized assets. For example, let's say stocks or gold or silver. But they would like to do that in a way that's permissionless. So you don't have to do KYC, going to your brokerage account and so on, and yet be able to access have, let's say, exposure to those assets. And one of the ways in which people have been building those products is using synthetic assets. So the idea is you issue an asset that basically tracks the price of the underlying, which could, for example, be a stock. So you don't actually hold the actual stock, but you actually hold synthetic asset that basically tracks the price of that underlying asset, which is the stock in this case. And so this allows you to get exposure to that synthetic asset and be able to trade that asset. in a decentralized manner. Now you can imagine, once you have all these assets, you need asset managers. You need people to handle your funds. You need people to manage your treasury. So to manage your funds and manage your wealth. And so there are all sorts of products being built in a decentralized way again. Like, for example, Wi-Fi, where you put your funds and the contract, which is a vault in that case, decides and plays around with certain strategies on how the product can actually use that fund and put that fund to use and to make money for you. So there are all these sorts of products that are being built, and you could imagine of building these products on Zilliqa as well. And this whole space is sort of mushrooming at a rapid rate. So the idea is to be able to capture, and again, I'm repeating this because the idea is to be able to capture every single product that you see today in the traditional world and be able to mimic that, provide that service and product on a decentralized platform that will provide features that traditional services don't. To give you a sense of how big this world is, this DeFi world is, it's over. I mean, it keeps on growing every single day, but it's around, I captured this around a week ago. So it's a $40 billion sort of industry, DeFi industry alone, and that's growing at a rapid rate. So we need to be able to, so what the basic idea is that what I'm trying to say here is there is a consumer out there who are looking for products like these and would be able to, would want to see usable products to use the products in the day-to-day life. However, as you can imagine, world is all not rosy. There are challenges out there, and one of the biggest. I'm going to have a few slides to present and talk about what are the challenges that people are facing today. Both users and consumers who are using some of these DeFi applications. At the same time, people are actually building those applications. So there are challenges on both sides. So some of the next few slides are going to be. I'm going to talk about some of those challenges that I feel and I see in the space today. So one of the challenges is about what I feel is that there are too few users. So if you look at the total number, I'm just talking about Ethereum today, and the blockchain world is obviously much bigger than Ethereum. But if you look at just Ethereum today, because a lot of activity, DeFi activity, is still centered around Ethereum. So the number of people actually hold a non-zero number of Ether is around 143 million. Again, these are not number of users, but more like number of addresses. And if you count the number of, let's say, the most popular DEX out there, which is Uniswap today, the number of users who are actually on Uniswap is around 100K. So it's a tiny portion of the total number of user base. So there are actually a lot of users out there who actually hold Ether, but who have never used any of the dApps that are out there on Ethereum. So that gives you a sense of how still the whole market is still very speculative, but there are users, and we have to build products that some of these people actually would use. And again, if you look at some of the list of these people, so these are this on the left-hand side, we have I put a table of all the DEXs out there on Ethereum and on Zilliqa, and look at the number of people actually trading on those DEXs. Of course, Uniswap and some of the bigger ones top, they have at least, let's say, Uniswap is probably the only one that has around 100K users, but the other ones are, they are, for example, they're even number 10 Bancor. If you look at the number of people actually trading against Bancor, there are very few. So less than 1,000 users. That gives you a sense of how big this market is, and yet we are still not able to capture that market. So this is one challenge that I feel from DeFi builders' perspective, is that there are users in the broader landscape, in the broader blockchain landscape, but there are very few users in the DeFi landscape. So we have to build products that can cater to these users that are still left out. We have, of course, you have seen about this issue around scalability. So even though a number of users actually using some of these DeFi products are actually very few, and yet we're already seeing challenges and we're already seeing limitations around the underlying landscape, underlying platform, which is around scalability. So the number of, now imagine, for example, if all these users, or even half of the number of Ethereum users, holders, if they start to use Ethereum, it'll be very difficult for the underlying platform, Ethereum in this case, to handle that load. Obviously, I'm not saying that works are not being done. Obviously, there are a lot of L2s there that are being developed. There are L1s there that are being developed to be able to sort of handle that load and that volume. But we are still in a world where I won't say that scalability is a solved problem. And for example, this is an example of some user who's trying to swap Ethereum for some token, and he wants to trade 19. So his trading volume is just $19, and he has to pay around $21 as fees. So this is certainly something that just doesn't make sense for this use, and yet he doesn't have a choice because the underlying platform just doesn't support it. This is one key area that I feel very strongly about, which is about irresponsible experiment. A lot of projects coming up, being built over a weekend, and some of these projects are actually holding and managing hundreds of millions of dollars of assets, and that again happens within a matter of hours, in fact, sometimes. And these products sometimes are not very well tested. Sometimes they are just, as I said, they're developed over a weekend and then get launched over time, and then you are expected to be able to use those platforms and those services. So I feel that this is something that developers have to take responsibility. We have to find ways to be able to release products in a way that's responsible. So we, for example, could put a cap on certain products, and when we launch, and then increase that cap over time. So for example, when you launch, let's say a lending protocol, then you decide that, okay, you are not going to manage more than, let's say, $10 million in the first week, and then you increase that over time so that the risks get lowered, and then people don't have to take too much of risk to be able to interact with those let's say not well tested or not sort of experimental contracts. There's obviously a sort of all sorts of rug pulls going on, but I feel that there are always going to be people who are going to take benefit of people who don't understand the space very well. But I do feel that we as blockchain developers have to take responsibility in terms of what we build and how responsibly we build those applications for our consumers. This is something that you may have seen floating around in the wild for quite a long time, which is around capital inefficiency. So there are a lot of products. For example, if you look at lending, for example, today when you launch or when you borrow, let's say $1 of assets, sometimes you have to put, let's say, $5 worth of collateral to be able to borrow $1 of asset from the contract. And that's mainly because you don't have the sort of privilege of using, let's say, KYC. For example, today when you buy an apartment, let's say, basically the collateral that you're putting when you're borrowing money against your apartment is basically your apartment itself. So the collateral is basically the same amount of what you're borrowing in a sense. While in the DeFi world, often case, you have to put a collateral that's at sometimes even 5x of what you're borrowing. And that's a clear sense that the way we have been building, and there's a cost of basically building and using some of these infrastructures. And the idea behind, one challenge is to be able to make these systems more efficient, capital-wise, so that when you borrow, let's say, a $1 of stablecoin or $1 of asset, you don't have to put $5 or $10 worth of assets in that contract. This is something that's interesting because if you look at the vision behind DeFi, one of the main ideas when people started talking about DeFi was to be able to say, okay, we are going to bank the underbanked, or we are going to provide services that many people don't have access to. So for example, if you go today and look at certain countries like even India, Indonesia, Bangladesh, there are a lot of people who don't have access to bank accounts yet. They don't, when they try to apply for a loan, again, some of these are micro loans. So that you want to borrow, let's say, $1,000 and not more to be able to set up, a small business. It's very hard for banks to give such a loan because there's too much of paperwork involved, and they just don't want to bother giving such a loan to some people in countries. So the idea behind, or the vision behind DeFi, was to enable or provide these financial products and services to these people who don't have access to these services. However, if you look at how many people from these countries are actually using these services, they're quite very few. So this is a table for different applications, DeFi applications that are actually running on Ethereum today. And they list the percentage of users actually coming from different countries. And if you look at, for example, so EM is emerging markets, so these are developing markets, and DM is developed markets. So if you look at the red box, the total percentage of users who come from emerging markets, that's roughly around 5%. So that gives you a sense of, the number of people who are actually using these DeFi will actually come from developed countries, so Western world. And the idea would be to actually fix that problem and be able to provide those services that these people actually need, because these are the people who actually need the most some of these services, because they don't have access to some of these services. And yet it's not happening. So either it's a problem because of, let's say, marketing. So people are mostly not focused around marketing to these countries because they feel that the capital is not there, because people feel that, okay, there's more money in America to put to use in DeFi and less so in, let's say, countries like Indonesia. But so that the other reason could be that people in this world, it's very difficult for them to get hold of, so get onboarded or on ramp to DeFi world. So it's probably a problem of on ramping. So we need to figure out how to solve some of this user experience to be able to offer these services to the people who actually need the most. For those who are not familiar with Zilliqa, some of those who are actually developing, they might know it. But Zilliqa is a blockchain platform that we started in 2017 from the National University of Singapore. It's a company that's currently, in terms of market cap, currently valued around $2 billion. In terms of economic activity, so the number of, let's say, ZILs being transacted on chain, it's around close to $75 million per day. And if you look at the DeFi or decentralized economy size, it's around close to $1 billion. I think it's now more than that. Around $1 billion worth of assets are being used in all sorts of DeFi activities today. So to give a sense of why we are building the Zilliqa, there are all kinds of reasons that you can imagine. Of course, that the platform is scalable. It's safe by design, so you can actually build products that are actually safe to hold funds. It allows people to transact at low fee. But I think one point that I think sort of overarches all of this is the fact that they're actually users, and there's a large consumer base that's sitting on top of Zilliqa today. I won't be wrong. I don't have numbers exact to back my argument here, but I won't be wrong or too far if I say that if you look at all the consumers, if you look at all the blockchain platform today, and you count the number of users actually using some of the DeFi products today on those platforms, number one obviously would be Ethereum. Number two would be Binance Smart Chain, and number three would probably be Zilliqa. So all I'm saying here is that when you have consumers, you would like to build products, and you want to build products where you have consumers. And what I'm saying that Zilliqa has consumers, and they're dying to use some of those products that actually exist today on the Ethereum. So they would like to use some of those products. Well, to give you a sense of what we have been building on Zilliqa so far, so there are three key pillars. One is around staking. So as you can imagine, staking is an interesting use case because people actually can put their ZILs to use, can put their assets to use, and be able to earn a passive income while supporting and securing the network. So that in a way sort of creates a decentralized system that secures the network, at the same time allows people to earn yields. You have the second pillar, which is the decentralized exchange. So it's an exchange similar to Uniswap, where you can actually trade assets. And we have a stablecoin that's mostly around Singapore dollar-backed stablecoin. So for the next few slides, what I'm going to do is I'm going to take you through each of these sort of three key pillars of what we are building on DeFi. And I would like to sort of give you opportunities and show you that there's an opportunity to build something because people are actually using those applications. And I will point to you what are the areas that I think we could work on, what we could improve upon. So if you look at staking in particular, we have around $1.1 billion worth of assets staked in the contract. We have around 70,000 users actually actively engaging with the DeFi, actually engaging with the staking program and staking contract. And this number of users, the chart below actually shows you the number of users is actually growing at a rapid rate. It's constantly growing. So the point that I'm making here is that there's a lot of user base, there's a lot of capital in place, and it's all about just literally begging for use case in some sense. And one of the key problems that I feel today is around trap liquidity. So we have all this liquidity which is actually being put in staking contract, but all that it does is basically sitting there and trying to secure the network. So the idea would be, can we actually build products that actually can use the liquidity that's actually sitting in the staking contract? And for this, you can imagine building all sorts of derivative products. So for example, there's this idea that you may have seen probably on the Ethereum space is around building what is called bonded tokens. So when people decide to stake, they have to put their ZILs in the contract, and that token basically, and their tokens basically get logged for at least 14 days. In the sense that when you try to withdraw those tokens, it will take at least 14 days for you to take your liquidity out. So your liquidity is basically logged for at least 14 days in the contract. What you can do is you can build, let's say, what they call bonded ZIL, where the idea is, if you lock 100 ZILs in a contract, you'll be issued, let's say, 75 BZIL, so short for bonded ZIL. And this bonded ZIL basically gives you leverage against what you have logged into your staking contract. So you can use this bonded ZIL to, let's say, buy other assets, or take your bonded ZILs and provide liquidity on ZIL swap or other things. So basically, it becomes your ZIL. And if you want to basically unlock your ZIL contract, you have to bring back and return back your bonded ZIL. So initially, if you had 100 ZILs in your staking contract, you were given 70 B ZILs, and you have to return your 70 B ZILs to be able to unlock your 100 ZILs. And that's one sort of way to build a derivative product that is built on top of the staking contract. You could imagine products where you can use these bonded ZILs into a lending platform, or let's say a MakerDAO-like platform. And when you take your bonded ZIL, put that into a MakerDAO-like platform, mint stablecoins against that, and then use your staking returns to pay for the interest rate. So it becomes more like, I'm not sure if you're familiar with this, but there's a protocol coming up, I think it's already launched now on Ethereum, it's called Alchemix, where the idea is basically you're given stable coins, you can mint stable coins, and the interest rate that you pay for stable coins get paid back through all the yield generating products that from where you can actually make money. So it's more like, it's a derivative product. So you put your money into work, and then whatever you're earning from that, your stake can be used to pay other things. So it could be paying your interest in a MakerDAO-like contract. It could be paying your interest in a lending protocol, for example. So all these DeFi products are something that could be built around staking itself. Another problem that I've been seeing today around staking is around manual reward withdrawal. So today, for example, when you put your money into a staking contract, your reward gets distributed every day, and you have to manually withdraw that reward. So one idea would be can we find ways to be able to sort of automate that process in some way? And if you automate that process, then users won't have to manually claim their reward, and then still be able to stake that in their staking contract. So essentially, these are sort of few ideas that I think could be built around staking itself. If you talk about ZIL swap, which again it's a pillar on its own, the total value that's currently logged in ZIL swap is around $200 million. So out of which, let's say $100 million worth of ZILs are actually logged in ZIL swap. If you look at the trading volume of ZIL swap, is close to around 10 million per day of USD per day. If you look at the number of traders, I used this slide before. There are around, this is the data from a week or 2 weeks old now, but the number of ZIL swap traders are actually pretty high compared to some of the DEX products that you see on Ethereum. So one pain point that's obvious that you might have seen when Uniswap version 3 was launched or Bancor was launched is around impermanent loss. So the idea is, can we make sure that people who are providing liquidity on ZIL swap don't have to suffer from impermanent loss, if any? And again, the idea is, can we find ways to be able to make things more efficient, especially capital-wise? For example, today, when you provide liquidity on ZIL swap, you have to provide both sides of the pair. So you have ZILs on one side and the other asset on the other side. You have, for example, I think in Bancor, where you can actually provide only a single sort of single side asset in a pool. So the idea would be here: can you build products around ZIL swap that solve these two problems? So capital inefficiency and impermanent loss. The third sort of area that I feel is interesting is around stable coins. So far, we have only a Singapore dollar-backed stablecoin. I was quite surprised to know that Singapore dollar-backed stablecoin is actually the largest stablecoin after USD and Euro-backed stablecoin. So the largest fiat currency that has been tokenized after USD and Euros. So currently, the market cap of Singapore dollar-backed stablecoin that's launched on Zilliqa is around $21 million. There are around 4,000 token holders today of Singapore dollars. So we are actually seeing a growth around Singapore dollars itself. Again, Singapore dollars is not USD, so it's not a reserve currency, a global reserve currency like USD. But yet we are seeing quite a bit of interest around Singapore dollar-backed stablecoin. Given that Singapore is a very tiny country compared to even India, and yet there's a demand for that. But some of the pain points that I'm seeing today is that there's no demand, there's no lending market for stablecoin on Zilliqa today. So if you look at Aave, for example, if you look at Compound on Ethereum, there's a lending market for all sorts of things. There's a lending market for Bitcoin, there's a lending market for Ethereum, there's a lending market for USD-backed stablecoins, and obviously there's some lending market for for altcoins, for ERC20s basically. But still, if you look at which asset has the most demand in terms of a statement, in terms of borrowing that stable coin. So if USDC are the assets which are most in demand, and that's why you see the interest rate actually pretty high. So if you look at Bitcoin, for example, or Ethereum, the interest rate is around 3%, while in case of USDT or USDC, the interest rate is around 10%, and sometimes even high as 12%. And so the idea is, can we build a lending market for Singapore dollar-backed stablecoin? Because right now there's no market for that. Can we build, for example, other yield-generating products for Singapore dollar-backed stablecoin? And that's something that's missing today. Well, kind of that's it for now. I have listed a few products that I would like to see. Obviously, one is synthetic assets. As I mentioned earlier, there are people who would like to get access to sort of, let's say Tesla stocks. They would like to get access to gold. They would like to get access to silver. And so it would be good for us to be able to build synthetic assets or synthetic exchange where people can trade those assets. We are actually internally working on quite a few projects around NFTs. And one thing that I'm foreseeing is that we'll get to a point where we will have NFTs that are going to be very expensive. So it could be at least $100,000 or even more. And the idea would be, can people sort of fractionalize those NFTs and be able to trade those fractionalized NFTs? And that's something that's not quite there or built yet for the Zilliqa platform. And I can also foresee that there's going to be a point where people will be building NFT indexes. So people will be sort of collecting different NFTs and creating index out of it. So one idea would be able to build some of these NFT indices in some sense, and be able to provide these products to people, because I do feel that there's a huge demand on the Zilliqa platform today to use some of these assets and some of these products and services. Basically, that's it. Thank you very much for your attention. I would love to take any questions if you have any. But one thing that I would like to close off with is basically that I would like you to build. I would encourage you to build products that other would like to copy, because that would actually show to you that there are people actually using your product, and therefore it's popular enough for someone to actually copy it. So build products and services that. So basically, I'm saying that don't copy products and services that you see, but build products and services that other people would like to copy from you. So that's it. Thank you very much for your attention. Would love to take any questions if you have any.
Thank you, Amrit. All right, guys, open for questions.
Okay. So, hey, Amrit.
Hey, hi.
Yeah. So as you said that you have an stable coin which is backed by Singapore dollar. So soon we can see in your wallet ZillPay, we can exchange Zill token with Zill USDT type stable coin.
Yes. So we are working on building a bridge.
Okay.
That will hopefully bring USDT or USDC like assets on top of Zilliqa, and then obviously you can exchange that.
Yeah.
Through with Zills or any other asset.
Okay, so is that the stablecoin which is built on Zill, is it tradable on Binance or something, or in any exchange as of now?
XSGD is, I think it's not listed on Binance, but it's listed on a few exchanges. For example, there's an exchange called CEX.io on which you can buy XSGD.
Oh. And one more thing, what's the ultimate goal of Zilliqa actually? What's the end goal of Zilliqa, that at that point you will think, yeah, okay, we have done our job?
I don't think it will ever happen, and I don't think when you start a company or start a startup, you would, I mean, unless your end goal is literally to sell your company.
Okay.
That's a very different matter, which most startups don't start with that goal.
Correct.
So my goal literally would be to be, let's say, top 2 or top 3 platform that people would pick to build their products and use the chain, basically.
Again, one question, as you said, if there is a traditional company, there are stake on it, right? And if you sell Zilliqa, what you will get and what the other party will get?
Zilliqa, if the company sells Zilliqa.
Yes, if the Zilliqa company gets sold, what the other party will get, because it's all decentralized, right?
Yeah, so it depends, right? For example, recently there was deal that happened, I think, between Omisigo. So Omisigo is a company that builds an Omisigo platform, which is an L2 chain,
Okay.
and it was bought by, I think, a company called Genesis Block in Hong Kong. So basically, when you buy such a company, you're buying the underlying treasury, basically, and you're buying the fact that there is a consumer around Zilliqa. There's a consumer around that chain.
Okay. It could be like valuation would be community based and the people based.
Thank you.
Yes,
Any other
and obviously
questions?
treasury as well.
Yeah. Okay. Thanks. Thank you.
Any other questions, guys?
Hello, sir.
Hi there.
Hey, so my question is, what do you think which is the best, collateral value as of now today for lending and borrowing, or
Well, there's no
you can say
best.
for loans?
Yeah, there's no best collateral, I would say. There are all sorts of collateral that people. I say it's a parameter basically today, and people are basically gauging how much risk they are willing to take, right? So, for example, if the system feels that okay, if the price really moves really badly. So, for example, let's say if today Zilliqa's or Ether price drops suddenly by, let's say, I don't know, 10x. So today it's, let's say, $1, it drops really badly to, let's say, I don't know, 10 cents. Then you may lose money. So the people who are providing, lending basically may not be able to have, cover their risks. So I don't say that there is a safe number there, interest rate there. It's all about how much you can cover, how much risk you want to cover. So there. I think in synthetics, I think the collateral ratio is, I think, 500%. On MakerDAO, I think it's around 150%, if I'm not wrong. But yeah, it all varies depending on different parameters that people decide or the builders decide. And some people sometimes even vote for those things. But it's all how much risk the underlying sort of system is willing to take and absorb.
Okay, but don't you think because of this volatility, anyone will not use or will not make, I think, the lending and borrowing thing? Like this is what it is stopping from building on DeFi.
No, I mean, people are still building. It's not that people aren't building lending protocols. And people, if you look at today, Aave and Compound, people are actually using some of those products. It's not that they are not. Or, for example, synthetics. When you actually go and mint synthetics, you need to put a collateral. It's not that people are not using, but yes, if you look at the number of people actually using them, it's not too many. And so one of the challenges is around this capital inefficiency. I mean, today, as I mentioned earlier, if I want to buy an apartment today in India or somewhere else, I don't give my bank 5 times the insurance, basically 5 times the collateral. I don't do that. My collateral is maximum that I give my collateral is the bank. So if I default, bank can basically take my apartment and sell it, right? That's all that it can do. Nothing else it can do beyond that. So we should not go beyond that point. But yes, the reason why banking system works, the traditional financial system works, because of low collateral, is because the fact that they know they have KYC due, so you cannot run away. So they know that if you default, then they have contracts, like literal legal contracts, to actually sell your apartment, which in the decentralized world they don't. And that's kind of one of the reasons why they have to put a high collateral sort of ratio. Hopefully, there would be a point where you could actually build a decentralized credit network, and when that works, then you actually may be able to say that, look, I know that let's say Harshal has a good credit history, and therefore I can bring the collateral value to a much lower amount. And maybe if there's someone who is new to sort of borrowing and he has never returned his money back, then in that case you could actually say that, okay, your credit score is not that high, and therefore you would have to pay a higher collateral. So it could be sort of a custom and dynamic way. Right now it's not the case.
Yeah, sure. And one more thing, you mentioned about real estate. Can real estate be a synthetic asset? What do you think about that?
So right now people are actually building tokenizing real estate. So for example, today you have apartments that are being sold, tokenized first, and then being sold on top of blockchains.
Yeah.
So the answer is yes. You could also, for example, say that, so when I mean by these real estate being tokenized, I actually mean the physical real estate. So you actually, when you buy some of those tokens, you actually buy the underlying asset as well.
Okay.
But you can obviously imagine, tokenized state as well. There's no reason why you can't. But I don't think there's a market quite yet. I haven't seen, maybe I'm wrong, but I haven't seen synthetic real estate yet.
Yeah, I have also not seen. I think people are only into gold and silver, I think.
Yeah, gold,
but I don't
silver,
think
you
so
have
that is-
tokenized, stable, let's call it stable coins, and then you have tokenized synthetic stocks.
Yeah. I think real estate would be a good thing for synthetic. Okay, thank you, sir. Thank you for that.
You're welcome.
All right, Amrit, there is a question in chat. I'm reading it out.
Sure.
The thing is, the question is from Akshay, has a mic issue, so he's not able to speak. So he's asking, do you think we will have social apps on blockchain? And if yes, would they also have some DeFi angle to it, since practically everything is about DeFi in this ecosystem? And do
Yeah,
you
so
see any of
yeah.
this gaining traction in Zilliqa ecosystem?
Yeah, it's the good thing about DeFi today, at least, is that we have seen users maybe mostly driven by the yield factor, right? So people see that if I put my money, so today, if you're holding your fiat and you're putting that into a bank account, you're earning close to nothing. In India, it's slightly bit different because the interest rate is high. But in let's say in developed countries like in Western world, the interest rate is pretty low, less than 1%. So you're not getting anything if you put your money into fiat into your bank account. And sometimes, in some countries, you actually pay. There's negative interest rates. You actually have to pay a bank for them to actually hold your assets. So what people are seeing today, at least in the DeFi world, is, sorry, I'm digressing a little bit, but let me finish this here first, which is people have two options right now. So either they can convert their fiat into, let's say, USDT, USDC, or stablecoins, and then use that into participating into all sorts of DeFi activities where they can generate yields, or they basically speculate. So they actually take the money and invest in different speculative assets and make money. But so the whole DeFi has literally gone into this wild world because they feel that you actually don't have to go into a speculative mode and yet be able to earn sort of decent yield without taking any speculative position. That's kind of powerful. Now, so while DeFi has literally seen sort of adoption and sort of product market fit, social, let's say, tokens are still relatively new. We are seeing some projects, exploring the idea where, I was reading a paper some time back where there are celebrities and there are fans on the other side, and fans actually want more and more from their celebrities, especially now in the lockdown mode where they actually can't see physically these celebrities. They actually want to get access to what they do, to a point where fans actually want to participate into their day-to-day activities. For example, I've seen some projects where celebrities would like to open up and say, do I have to wear pink, or do I wear black or something today? And people actually pay to actually vote for those things. And then if the celebrity decides to wear that, then something happens. So there's a lot of activity going on, especially in this, in the digital world, where fans like to engage more and more with their celebrities, and people and these fans actually want to pay for it. You have, I think in China, there's a huge market where even small celebrities, I won't even call them big celebrities, but actually people who are good singers or musicians or piano players, they actually take requests online from their fans and they get paid for it. So there is definitely an emerging market in that field. It's yet to see how some of these tokens will develop in that social market, but I do see that there's a market for sure. We're yet to see where there is how well that fits in, but there's definitely a demand and there's a market for people to develop social apps and social tokens. To see that to connect with the DeFi angle, I do feel that there is a DeFi angle as well. We have seen for example, NFT used now as collaterals, NFTs being tokenized, NFTs being used as collaterals on different platforms. So I do feel that these celebrities will issue NFTs for different things. And those NFTs, for example, could be used as collateral in some of the DeFi applications that you see today.
Thank you,
To answer the
Amrit.
last part, which is about attraction in Zilliqa ecosystem, we haven't seen right now the NFT ecosystem, at least on Zilliqa, is still very new. So we haven't quite seen NFT that actually integrates with the DeFi ecosystem. But as I mentioned on my last slide, I do feel that there's an opportunity to build a DeFi index fund of sort, and I think this is where things may start. We are actually interested in building something of that kind as well.
Thank you, Amrit. All right, anyone else has any questions for Amrit? Anyone wants to understand more? It's a good time
So
to
I
get
have a
the
question.
hang of. Yes, Anu. Please ask your question.
I'm not sure what happened.
Yeah, I thought it was on my end only.
Okay.
All right, Anup, can you write down your question? And Nadeem, you can go ahead ask a question if you want.
Yeah. So, sir, who is the real competitor of Zilliqa? Uh, Maybe Cardano is also building smart contracts and maybe coming. So they are doing a lot of you know uh, videos are coming that they are building these smart contracts, and uh, they are planning that they all the dApps will be moving to Cardano, and you also have this smart contract. So I want to understand that there are so many competition going on. So who is the real
Yeah. So
competitor of Zilliqa?
my short answer is today there are very few platforms today. If you look at all the, let's say, top 15 or top 20 blockchain platforms today, and let's say count the number of transactions that are being processed on some of those platforms, and if you rank them, and again, I'm talking about smart contract. I don't know. I'm not sure if it still has smart contracts yet, but I'm talking about if you look at all the, even Cardano right now, if you look at all the smart contract platforms and sort of count them with and sort of rank them with the number of transactions, I think that's a sort of decent metric to give you a sense of who is competing against whom. And so if and I don't have the slide right now, but so I did that sometime back, I think in last December. And so among all the top platforms, we were ranked number 7 in terms of number of transactions that we see, the network sees being processed. I'm not talking about the capacity that what network can process, but the network actually sees. So how many people actually send transactions and how many of them actually get processed. So in terms of that number, our ranking was around number 7. Number 1 was EOS, because I think it does around 12 million transactions per day. Ethereum does around 1 million transactions, around 1.3 million transactions per day. Zilliqa currently does around, literally yesterday, I think it did around 90K transactions per day. So if you look at from that angle, I would say our competition right now, in some sense, in terms of number of transactions or how many people are actually using some of those products being developed, I would say Ethereum and Binance Smart Chain, because Binance Smart Chain definitely has quite a bit of consumers.
Thank you, sir. Thank you.
Okay, so I'll ask the question now. Sir, according to you, which is the next trillion dollar bitcoins? Means for now, Bitcoin was nothing 10 years ago, but today it is a trillion dollar coin. So according to Amrit Kumar, which will be the next trillion dollar coin so we can invest now?
I'm sorry, I can't give an investment advice, but I guess we're in a space where a lot of experiments are being done. Ethereum is again where a lot of experiments are being done, and the idea would be to see which one basically wins in the end. I don't feel that there's going to be one platform, because I'm already seeing even today, no matter what people say, if you look at actual numbers, there are quite a bit of activities actually happening on different chains, whether it be Zilliqa, Ethereum, Binance Smart Chain, Cosmos. Some of these chains are actually pretty active. So I would say that one of these will probably be the winners, but I do foresee a world where there will be at least 4 or 5 well used chains, and some of them which will still try to find their place in the ecosystem. I'm sorry if I didn't answer your question, but the idea, basically what I'm saying is that it's still very early, and as I mentioned, if you look at Ethereum's number of people who actually hold Ethereum and how many of them are actually using dApps, it's a very tiny percentage. So it gives you a sense of how early we are, and probably in 10 years time, even 20 years time, we'll probably see 2 or 3 platforms who would actually win and would actually be able to attract a decent consumer base. And that, I think, that would be the next, you can call it the next Bitcoin or the next Ethereum.
Amrit, there's a question in chat. The question is, the bonded token you were talking about, is it similar to LP tokens on Ethereum or BSC?
So Ethereum has, I think it's called SETH, right? I think it's called SETH, and there are multiple. So basically, for those who don't have the context, so Ethereum has this staking program as well, and where basically when you have staked Ethereum, your tokens get logged for a long time. So what people do is, some of these actual pools actually provide you a liquid. Sorry, if you could switch off your microphone. It's so the idea is, some of these actual pools actually allow you to that actually give you a token that represents ETH. So if you have logged 100 ETH, they can give you some, let's say, SETH or that ETH, and that you will be able to use as if it was Ethereum tokens. LP tokens are slightly different, because LP tokens are actually used to provide extra liquidity, extra incentive. So it's a little bit different from LP tokens, I would say. It's more like a token that you get against your liquid assets. So it's more like, it's not even like Aave, the Aave tokens. It's not even like that. It's literally like SETH. So these are tokens that you get issued because you have logged a certain liquidity, and these are the same tokens. These are equivalent to the ZIL tokens. If that makes sense.
Hello, sir. Harshan.
Hi.
One last question. Why we haven't built anyone, or in India haven't built any stablecoin for Indian rupee? Like, why? Well, like USDT or some other stablecoins.
Well, I guess there's some people with building INR-backed stablecoin, but I guess it also depends on how open the government is in taking in accepting some of these stablecoins. Some governments feel that it's a challenge to them. They feel that it might be a threat to their local currency. But I do feel that hopefully we'll come to a point where most governments will either decide that, there are obviously certain governments who are trying, CBDCs and stuff like that. But at some point, people understand that there's a huge benefit of using tokenized currencies. And today, for example, if you transfer, let's say, money, if you do remit your money from, let's say, UK to India, even through the cheapest provider, you still pay substantial fee. While if you're transferring using USDT, USDC, or even, let's say, if you had INR-backed stablecoin, it would be much cheaper. Close to, I don't know, you transfer $1 million today on Zilliqa, you pay less than $1, and that's not quite possible with the traditional systems. And so at some point, people will realize that there is a benefit of going that route, and their hands will be forced at some point. So hopefully, we'll get there sooner rather than later.
Yeah, sure.
There's a question on the chat, I think. how do you say could be used on Zilliqa platform, which requires scalability or high TPS? There are actually some projects that are building sort of quant models, so training models, where, and I think this was a lot of effort actually went into this. A lot of people actually were building these products some time back when the ICO craze was really high, where people were building products where you could actually use external sort of service providers to actually build your model, so machine learning models. And you could actually train your models in external sort of third-party networks, and you could incentivize people to provide that hardware or services for you to train your models. I don't think they have quite found the market fit yet. Probably the most popular today on Ethereum is around Numerai, but I have not looked into great detail into how well they are used and so on. But yeah, someone has to take a look at how much people are actually using some of those services. But I'm not looked into it in that detail. But yeah, there are people building some of these third-party machine learning models, let's call it network models. But yeah, we'll have to see how successful they are.
Thank you, Amrit. Any other questions for Amrit?
Manav, I have a question. So my question is
Yes.
more of platform specific. So I actually have two questions. So one is, when is ZK Snarks coming on testnet? And another one is, when can we see the layer 2 Z proposal? I mean, by what time we can expect?
Yeah, so we started working on ZK Snarks some time back. So what we have done so far is, so in order to build ZK Snarks, you need a few things. Number one is you need let's say you need to be able to, your language, which is Scilla in our case, your language needs to support a certain type of specific elliptic curves. So what we did was we added support for that curve. The second thing that you need for ZK Snark is to be, so most of the ZK Snarks today are you use what's called a pairing. So pairing is a cryptographic primitive that is used to actually build ZK Snarks. So we added that pairing primitive as well. The next step for us would be to be able to sort of piece them together and basically have a primitive, or let's say a language construct that will allow people to verify a ZK Snark proof. Doing that proof and building that proof can always happen on chain, but what you need is to be able to verify that proof, that the proof is valid on chain. So this is something that we have to build. Unfortunately, I don't have a timeline yet because we got a little bit busy with some of the work that we have been doing. So I don't quite have a timeline yet on when it might be ready for people to use. To answer your second question about, sorry, I forgot your second question. What was it?
Yeah, it was related to layer 2 zip.
Layer 2. So yeah. So we felt that, and again, when we started working on ZK Snark, the idea was to actually use that as a. I don't know if you guys know this, but ZK Snarks can be used for two things. Number one, it can be used for privacy, and it can be used for what's called an outsourced or verifiable computation. And the biggest use case for ZK Snarks is not actually in privacy. And that's kind of what we are seeing today as well, with ZK rollups and so on, where the idea is basically that someone does the computation for you. So you list a set of transactions and someone performs that computation on those transactions outside of the chain, and then you basically build a proof that that computation was done correctly. And on chain, you actually verify that proof. So verifying that proof actually is constant time. So it doesn't take more than a few milliseconds to actually verify a proof. So most of the cost actually goes into actually building that proof. So the idea, one of the key use cases that are actually being explored now quite excessively in the Ethereum world, especially because of the underlying scalability issues, is to actually build a layer 2 that uses ZK Snarks to verify, to build proofs out of the chain, and then you should be able to verify the proof on the chain. What we felt, we started to work on this, and that's kind of what the motivation was when we started to work on ZK Snark. But we felt that, right now, the only reason why we should spend time on building a ZK Snark backed L2 would be reducing the latency. Because in terms of throughput, we still have, someone, I think last month, someone literally spammed the Zilliqa network and was able to do 1 million transactions within span of 8. While if you look at Ethereum, they do around 1.3 million transactions per day. So we could literally do 3 million transactions today without hitting into any sort of scalability block bottleneck. So we felt that in terms of if you wanted to build a layer 2, it will not be for scalability for sure, because the underlying platform still has quite a bit of capacity to handle the load that may come in. But if you were to build this, it would only be for latency. But then while we were doing this, we also realized that there were certain bottlenecks that we're actually seeing on the Zilliqa platform itself. And one of the main bottlenecks was about smart contract processing time. So Scylla, as some of you, if you have used Scylla, you may have noticed that Scylla does not use a compiler. So it's like a Python interpreter. So you write your contract and then it gets interpreted directly. And some of you may know that interpreters are generally more costly in terms of time. So it takes more time to actually execute a interpreted code compared to, let's say, compiled code. So we felt that it would be good for us to, if you wanted to improve latency, the first thing that we should probably actually look to work on should be to actually build a compiler. So we are actually right now we're actually building a virtual machine that uses LLVM behind the scenes. And once this this virtual machine will be ready, I hope that the time to process a smart contract will be very, very close to the time that it takes to process a regular payment transaction. Right now, the difference is at least 10x, if not more. So we are trying to bring that closer and closer to the time that it will take to process a regular transaction. So our sort of focus sort of switched a little bit on improving sort of latency aspects on the on-chain latency aspect directly. And once we are sort of satisfied with what we can do with the on-chain optimization, then we would switch over to L2. But again, it will not be for throughput, but more for scale, let's say for latency.
Thank you, Amrit. Anyone else has any questions? No questions for Amrit? All right. Okay. Thank you, Amrit, for taking out time and talking to us.
Thank you very much, Mara. It was lovely being here. Thank you very much for your questions. It was lovely being here.
Thank you. It was lovely having you, Amrit. I hope you enjoyed talking to everyone.
Definitely.
Thank you.
Thank you, guys. Have a good day. Thank you. Bye.
Thanks. Bye. Thank you, everyone. I hope you enjoyed everything, and look forward to our next call. And let's continue moving towards our journey. Thank you.
Thanks everyone for coming. It means a lot.
Hey, Venkat.
Hi, Manu.
I hope you enjoyed it.
Yes, absolutely.
Hey, Saurabh, why don't you also join? Yes, so I hope that really helped you understand what we are going to do forward, and you can then plan accordingly.
Not 100%, but yeah, I think I am able to get some hook of it right now, so I should be able to go ahead with this one.
That's great. That's great, Venkat. All right.
Yeah.
Okay.
Thank you.
Okay, Mano. I'll probably call you some other time.
Sure, Venkat. Hey, Saurabh.
Okay.
Bye.